As the year ends, Tesla's demand continues to increase, as the target to hit 500,000 deliveries in 2020 is becoming more and more of a reality. In this video, I will talk about Tesla's demand in China, as it is expected to see a surge in Q4 thanks to Shanghai's updated license plate rules. I will also talk about Tesla's big advantage over legacy automakers, as well as the news that Tesla is giving away an entire year of free supercharging to new Model 3 and Model Y buyers as it tries to ramp up sales to reach these 500,000 vehicle delivery goals. If you're interested in these topics, don't forget to subscribe to Electric Invest, where we cover EV news as well as rumors and analysis of the stock for a better investment. Don't forget to give the channel a like for the YouTube algorithm, and without further ado, let's begin. So according to this article from Tesla Theory, Tesla sales in China are expected to see a surge in Q4 with Shanghai's updated license plate rules. Tesla in China may repeat its outstanding Model 3 sales from last month this December. A graph from the Secretary General of the China Passenger Car Association, or CPCA, Kui Dong-shu, and I apologize if I mispronounced that name, revealed that 6,846 Model 3 units were sold in Shanghai just in the month of November. This made up 31% of the entire amount of China-made cars that Tesla sold last month in China. Tesla Model 3 sales increased in November, with the CPCA reporting a total of 21,604 Model 3 units, which, to put it into perspective, that's 78% increase compared to the October sales. So that's about an increase of 3 times, which is pretty good news, so very large increase indeed. So this surge in Model 3 sales could be attributed to the new city's updated license plate rule. Just in October, Shanghai drivers' interest in new electric vehicles, or NEVs, that it will be expanding restrictions on non-local license plates. Well, basically, the cars with non-local license plates would not be allowed to drive through certain elevated roads in the city from the times of 7 a.m. in the morning to 8 p.m. at night, starting in November 2nd. Since the policy took effect last month, the spike in sales could continue on to December, leading to a Q4 surge for Tesla. And I totally agree that it would definitely aid on the Q4 surge. And with the 78% increase from October sales to November, we can only conclude that the sale increase in December are going to be even more significant. I don't want to speculate on the number, but it wouldn't surprise me if the increase would be higher than 100%, judging that 78% from October to November before the news of the license plate breaking out. But right now I want to talk a little bit about Tesla's big advantage over legacy automakers in software, because this article from Yahoo Finance that just recently got released, we can see that the analyst Monster estimates that Tesla could recognize over 1.1 billion in deferred software revenue in 2021 from its supercharger network, internet connectivity, and full self-driving features of over-the-air updates. And he goes on saying that the number should increase to 1.5 billion in revenue sales by 2022. So just for context, this year, according to the 10K filing in 2019 from Tesla, Tesla is expected to reach 751 million in deferred revenue. So this is very important because very few analysts are paying attention to this side of Tesla's business. Very few analysts, like ones from Goldman Sachs, have actually priced in on this huge revenue source. And we can see that from their last price target to $780 that they recently released, thanks to this untapped deferred future revenue potential. So Monster's case is basically that the full self-driving software is going to be one of the major sources of untapped revenue. And he assumes that both revenue and vehicle deliveries will grow by 40% annually. Now, this is a little bit conservative because we know that according to Elon Musk, Tesla is expected to increase by over 50% year over year. We know that analysts tend to be a little conservative, but due to the pandemic, it is okay to assume that 40% annually is still not too far from what we could expect from Tesla. He goes on saying, and quote, "As FSD gets closer to full autonomy and users find it more valuable, we believe that the attach rate will increase, as well as the price." So the average selling price in 2020 for the full self-driving was $8,500, and the attach rate is 35%. This is slated to go up to $10,000 and 37.5% respectively by 2021, and 11,000 by 2022. So that's only because FLC just recently changed to 10,000, and a lot of people in 2020 were still buying it below that. So when Monster starts talking about the over-the-air advantages of Tesla compared to other legacy automakers, he says that Tesla has a multi-year lead over traditional auto with over-the-air software updates, and that puts Tesla in the latter in a tight spot. He points out at the self-driving beta software improvements as evidence of Tesla's dominance in this field. Analysts like like Monster are starting to understand the untapped revenue that Tesla could do. A lot of analysts that say that Tesla is overvalued are just literally looking at the numbers for the cars. They're not understanding this over-the-air software revenue whatsoever. I mean, just think about it. Tesla could literally just stop selling cars and they would still be making a lot of revenue if they decided to simply sell the over-the-air updates. But of course, that's not going to happen because we need the Tesla cars to be collecting data in order for the over-the-air updates for the full self-driving to continue to get better, as to why people want to continue to pitching 10,000 or more into such a software. So everything is connected, everything is in a package. But I just wanted to point out the fact that Tesla's extensive vertically integration is literally a cash generating machine from all sides. And we're not even talking about the infotainment revenue, with games and apps that Tesla is gonna sell. So the possibilities are endless. But I want to move up real quick to the third piece of news that I'm talking about in this episode, and that is that Tesla is going to be giving away an entire year of free supercharging to new Model 3 and Model Y buyers as it tries to ramp up sales and reach its 500,000 vehicle delivery target for 2020. As we already know, Tesla needs to reach over 181,000 vehicles just in this quarter to be able to achieve the 500,000 vehicle deliveries. So according to this Business Insider article, US customers who buy a Model 3 and Model Y vehicle before December 31st will get free access to its supercharging network for an entire year. This was first reported by Electrek, but it was also fully confirmed by Tesla. According to Tesla Tari, customers can activate their free 365-day charging during the first 2 weeks of January 2021, but noted that the offer only applies to cars purchased from the inventory and not special orders. So there goes my ability to be able to benefit from this. I personally was thinking about buying a Model Y, but that's not gonna happen until much later in 2021. So this is actually pretty interesting because not only will you have to buy before December 31st of 2020, you also are not able to activate your free supercharging year onto the very first 2 weeks of January. But it is still a very good thing that Elon is doing because it is going to definitely help boost a little bit on the incentives, to have a little bit more of an incentive to buy a Tesla, especially to help increase the demand in the fourth quarter. One more thing that I want to point out, that Electrek reported that this offer of the free 1-year supercharging does not apply to the $35,000 standard range Model 3. And as far as I know, this model has been discontinued, but maybe they're referring to the people who bought it this year before they stopped. Maybe you guys can tell me in the comment section below and correct me if I'm wrong. So this is all pretty good news when it comes to Tesla, because like I already mentioned, Tesla needs to reach 181,000 vehicles this quarter to achieve the 500,000 target in 2020. And like I mentioned on my previous video, Tesla is actually putting a halt on the Model S and Model X deliveries for 2 weeks starting December 24th, and that's because according to an article from the Monthly Fool, they said, and quote, they already achieved its goal for the Model S and Model X deliveries in the fourth quarter, and this allowed employees to focus all of their efforts on production and delivery of the company's higher volume Model 3 and Model Y vehicles. So Tesla right now is just focusing on Model Ys and Model 3s because this was really going to help Tesla achieve the 500,000 deliveries this year. So I just want to talk a little bit about the Tesla stock right now. And the stock has remained around the 630 to 645 mark. And it's just being pretty volatile because a lot of the people right now, have already priced in on the S&P 500 inclusion. So there's not a lot of catalyst going on right now as we speak other than just the S&P inclusion. And I just wanted to talk a little bit about that because I always keep saying this in the last few videos about Tesla that I've been releasing. And that is that regardless of what happens to Tesla stock, by the time that it gets into being the inclusion, it wouldn't surprise me if Tesla stock drops temporarily because there's gonna be a lot of shaky hands, that don't believe in the stock. They just want to get some quick gains. So that is something that definitely you have to be in the lookout. There's a lot of resistance right here in the $650 mark, and unless we have another catalyst, we can pretty much assess that Tesla is just going to stay around that 630 to 650 mark before the S&P inclusion, maybe potentially dropping temporarily and then potentially slowly gaining back up as the company starts to gain more momentum on the fourth quarter deliveries, which I definitely think that they're going to accomplish because of Tesla's ramping up of production. So I definitely see them hitting. So I definitely see Tesla breaking out of that $650 mark, but we're just gonna have to wait until January. So this is just my opinion. This is not financial advice. You definitely should be doing your due diligence. I just like to present some Tesla news and just put everything into perspective for you guys to help you just to be able to spark a little bit more curiosity, so that way you guys can go ahead and do your own due diligence, and that way at least I can inspire some of you to continue to seek for more information. We just hit 3,000 subscribers, and I actually just did a video driving a Tesla Model Y for the first time. That is a video that I'm going to be posting very, very soon into the channel. I just want to thank all of you that have subscribed to the channel and have watched this long. If you have, don't forget to subscribe to the channel and hit the notification bell so you don't miss the next video on Tesla. I'll see you guys in the next video.